How is it that one loan program can take a borrower from not qualifying for any home to qualifying for their dream home? Hi, I'm John St. Thomas. I'm a mortgage loan officer with CMG Financial and a real estate investor based here in Phoenix, Arizona. What is this simple loan program change? Well, it's the simple change of going from a full documentation loan to a bank statement loan. Now, this loan type can only be done for self-employed borrowers, but it makes a world of difference for self-employed borrowers in their ability to buy the home they actually want. See, when we do a full documentation loan, we need to see all their tax returns, bank statements, pay stubs, their blood type, you name it. We need to get everything. And as we know with most self-employed borrowers, their tax returns don't look so great because they write everything off, as a savvy self-employed business person would. But on the mortgage lending side, that means they ultimately can't qualify for anything because all those respective write-offs they take diminishes the income that we can count for them. The other piece of the pie that's generally not considered with this is when we do a full documentation loan, we look at the last 2 years of tax returns, generally speaking. And for most self-employed people, they are usually about a year or so behind on filing their taxes. It's very common for self-employed business owners to file an extension for the most recent tax year. And by doing so, it essentially makes us look at old income numbers. As we sit here in 2026, many business owners have not filed their 2025 tax returns, which means I, as a lender, have to look at their 23 and 24 tax years. If you're running a growing business, this poses a problem because I'm looking at income that is 2 and 3 years old and will likely be much less than what your current income is. This is where bank statement loan qualifying comes into place. I can look at the last 12 or 24 months of your business bank statements and derive income from that. Seeing that these bank statements are the most recent 12 or 24 months, it's a more accurate depiction of what your income currently is. It also allows for us to look at your income prior to any of these write-offs that you have on a tax return. So we're truly looking at your raw income, and most likely is probably the more accurate picture of what your income is. This has allowed me to qualify borrowers for substantially more than when I looked at their income as a full documentation loan. Sometimes 10 times more income. So if you're a self-employed person and you're interested in purchasing your first, second, third, fourth, fifth home and thinking that you won't be able to do so because we as the lender have to look at all of your tax returns, think again. There are bank statement loan options available to you that can allow you to qualify for much more in today's marketplace. I'm always more than happy to help look at this for you and see if it makes sense for your situation. So as always, please feel free to reach out.